China is cracking down on tech companies, and foreign investors are losing billions. Have investors learned their lesson, or do they still trust the CCP? Welcome to China Uncensored. I'm Chris Chappell. Over the past few months, the Chinese Communist Party has been cracking down on tech companies. They started out last November by blocking Jack Ma's Ant Group initial public offering. Then this spring, Chinese regulators started an antitrust crackdown on several big tech companies, including internet conglomerate Tencent, Jack Ma's e-commerce company Alibaba, and food delivery app Meituan. That's resulted in billions of dollars of fines for Alibaba and Meituan. Then in July, the Chinese regime targeted rideshare app Didi, taking it off app stores just 2 days after it made a huge IPO on Wall Street. And just 2 weeks ago, Chinese authorities expanded their regulatory crackdown to private education firms that provide online tutoring. The Chinese Communist Party is definitely sending a message. The problem is, no one is really clear what that message is. Sure, there are individual explanations for each set of crackdown. Initially, people thought the party was targeting Ant Group in November because Jack Ma made a speech challenging regulators. The antitrust actions against Alibaba and Meituan happened after the Politburo announced they would be strengthening anti-monopoly efforts last year. The Communist Party wants to make sure private companies don't get bigger and more powerful than the party can handle. Meanwhile, Didi's troubles are related to the Chinese regime clamping down on data security. Because the Chinese Communist Party doesn't want private Chinese companies to take people's data and share it with foreign governments. No, that data should go directly to the Communist Party. And the Chinese regime's moves against for-profit private tutoring may be related to their efforts to make having kids less expensive for parents, since they're now facing huge problems because people aren't having enough kids. Of course, parents are saying the party's actions are actually only helping the rich and hurting the poor, but that's another episode. So theoretically, there's an explanation for each individual crackdown, but they're not the only possible explanations. Some people think this tech crackdown is actually about Chinese regulatory bodies having turf wars with each other. Others think this is about the Chinese regime redirecting its tech industry to focus on national priorities. In other words, instead of letting tech companies just make apps based on what consumers want, now they'll need to align their business interests with the Communist Party's interests, like semiconductors, military tech, and surveillance. And there's another overarching explanation for China's tech crackdown: power. I'll tell you more after the break. Welcome back. So China's tech crackdown isn't just about anti-monopoly laws or data security. It's also about political power, the political power of the Chinese Communist Party. Leland Miller, the CEO of China Beige Book, connects it to the upcoming Communist Party Congress.
And I think the overarching theme is from now straight through the party Congress next year, what happens once every 5 years. It's where the leadership will solidify Xi Jinping for another 5 or 10 or who knows how many years. They're supposed to pick successors. Very politically sensitive time. I think between now and then, there's going to be a lot of things done by the government that show that, by the party, that show that the party cares.
But to add another twist to this, it's not just about making people love the party ahead of the party Congress. It's also about the party's internal turf war, the factional power struggle between Chinese President Xi Jinping and former leader and Hypnotoad look-alike contest winner Jiang Zemin. If you've been following everyone's favorite communist soap opera, General Hostility, you know that Xi Jinping being given another term as party leader isn't 100% lock. Next year's Party Congress is key for Xi, because it's the one where he's supposed to step down and appoint his successor. But he wants a third term in power instead. Meanwhile, Jiang Zemin's faction is trying to oust Xi completely. So what does this have to do with the tech crackdown? Several of the companies targeted in the tech crackdown have ties to the Jiang faction, most notably Ant Group. The Wall Street Journal reported that Ant's IPO was stopped after it was clear that Ant's investors included some with links to political families that represent a potential challenge to President Xi and his inner circle. I did an entire episode with more details about that. But even ride-sharing app Didi had investors with ties to the Jiang faction. So the Chinese Communist Party's internal political war was likely a major reason for the tech crackdown. And so the party's power struggles also had a huge spillover effect in the West. Due to the tech crackdown, Chinese stocks listed in the U.S. cratered. The Nasdaq Golden Dragon China Index, which tracks 98 of China's biggest firms listed in the U.S., plunged 22% in July, its biggest one-month drop since October 2008. Stocks included in the index have seen $829 billion in value erased. And those weren't Chinese investors who lost more than $800 billion. Those were American investors. But guess what? China doesn't care how much money foreign investors lose. Shocking, I know. In fact, this is another sign that the Chinese Communist Party is actively decoupling from the U.S. on its own terms. It wants foreign investors to directly put their money in China's stock market instead of Chinese stocks listed in the U.S., because the party has more control over money in China. This is the new message. If you're going to invest in China, you'll have to do it through the capital markets it's developing. That won't only strengthen the domestic economy, it will also allow Beijing to make sure the capital goes to industries it wants to develop and stays away from areas it deems a threat to the common good. You see, for years, Chinese companies have been coming to Wall Street to list their stocks. This is actually illegal in China, but they get away with it through some shenanigans involving making shell companies in places like the Cayman Islands. Fun fact, if you own a Chinese stock listed in the U.S., you don't own shares of a Chinese company, you own shares of a shell company based somewhere like the Cayman Islands that has an agreement with the original Chinese company. This is called a variable interest entity, or a VIE. For example, TikTok is traded through a VIE. That's how TikTok tried to claim it was not a Chinese company, but a Cayman Islands company, which doesn't make anyone feel better. If you're thinking that this is an insanely risky way to invest, yeah, it is. But that didn't stop investors from pumping hundreds of trillions of dollars into these shell companies. Now the Chinese regime is betting that they can limit Chinese companies from listing on Wall Street and have U.S. investors go to China instead. So will it work? Will these huge investment firms like BlackRock and Goldman Sachs that have put billions of dollars into the China market follow the party's wishes? I'll tell you more after the break. Welcome back. So how did BlackRock and Goldman Sachs feel about losing billions in China stocks? Were they concerned? Oh, they were. But they're totally good with it now because Chinese authorities held a secret meeting with these financial firms just to restore calm. Shh, don't worry, BlackRock. Everything will be okay. Representatives from Goldman Sachs, JP Morgan, BlackRock, Fidelity, and UBS Group attended the closed-door meeting in Beijing. Hey, the whole gang was there. You see, there's an entire ecosystem devoted to keeping foreign investors investing in China. I talked about it in this episode, China's giant Ponzi scheme. Sure, investors in U.S.-listed Chinese stocks lost over $800 billion because of decisions made by a totally opaque authoritarian state. And you know what that means. Chinese tech stocks are on sale. What a bargain! You should definitely consider buying. That's like saying, hey, this house built on top of an Indian burial ground is on sale. What a bargain! You should definitely consider buying. It has lots of atmosphere. Look, maybe investing in these companies that have lost hundreds of billions of dollars and could lose more at the whims of the Chinese Communist Party is actually a great opportunity. Oh, the optimism. Forget looking at China through rose-colored glasses. This is like looking at China through a rose-colored space telescope. That beautiful rose color just makes the images of the concentration camps disappear. It's like they were never there, just like the Uyghurs. On a completely unrelated note, JP Morgan and Fidelity just got the party's approval to operate the first fully foreign-owned brokerage and mutual funds in China. Surely this has nothing to do with how enthusiastically they pitch China stocks to American investors. Actually, that's not the worst part of this whole situation. The big institutional investors aren't pitching China stocks because they're stupid. They're pitching China stocks because they've lost money after the value plummeted, and now they need more investors to buy into these stocks and pump the value back up. It's part of China's giant Ponzi scheme, and they're knowingly promoting it. Here's some advice. This is not investment advice. This is being a decent human advice. Don't actively invest in a country ruled by an authoritarian communist party that's currently committing genocide. We're talking about a regime that is killing people and selling their organs. Even without the huge moral issue here, would you trust your money to a regime that kills its own people and sells their organs? Remember, China doesn't care how much money you lose. Which is why when it comes to investing in China, you should listen to the calmest, most rational voice on Wall Street, Jim Cramer.
It's Stalinist. We tend not to see that. I think these are very serious violations that make us realize that capitalism is not alive in China. And we kidded ourselves that we thought that the party was somehow going to want to join the rest of the world in being capitalistic. They're not. This is a dictatorship, and we're beginning to wonder. I question every one of those companies that's on that list. Any one of them could be vulnerable. It's time. You got to go. You can't own these stocks. I mean, the party may decide tomorrow that Alibaba's charging the people too much. So I don't know. Andrew, I think we're discovering that they were communists. But they were communists all along.
Yes, Jim, they were communists all along. Now it's time for me to answer a question from one of you, a China Uncensored 50-cent Army member who supports China Uncensored through the crowdfunding website Patreon. Logan asks, well, I hope the CCP virus version 2.0 doesn't stop you all from traveling again. What are some places you may go? Perhaps all of the Quad nations. Well, Logan, with what's going on with the CCP virus, I don't know if we're going to be able to travel internationally anytime soon. But it would be really cool to go to the Quad countries. We did go to Australia back in 2018, but we haven't been to Japan or India. And we definitely want to go to India. Could you see me traveling to the line of actual control, meeting the Dalai Lama, and most important of all, starring in a Bollywood film? We've also talked about going to some of the Pacific Islands that are being influenced by the Chinese regime. And we definitely need to go back to Taiwan. But where would you like us to go? Tell me in the comments below. Thanks for your question, Logan, and thank you to everyone who supports China Uncensored on Patreon. We could not do this show without you. So if you're interested in joining our fight to expose the Chinese Communist Party, head over to patreon.com/China Uncensored. You'll also get a bunch of cool perks, including the chance to have me answer your question on the show. Once again, I'm Chris Chappell. See you next time.